Gamuda's 4 Klang Valley highway concession holding companies have agreed and finalised the terms and conditions of a draft share sale and purchase agreement with Amanat Lebuh Rakyat, a recently established private not-for-profit entity. Under the finalised draft agreement, the 4 highways will be disposed of to ALR for an aggregate 4.477 billion, with Gamuda's portion amounting to 2.347 billion ringgit. In its boss filing, Gamuda said the finalised agreement will only be executed upon the fulfilment of all conditions set out in the respective conditional letter of offer from ALR, which includes approvals from shareholders of the respective concession holding companies. The 4 highway concession companies are Kesas Holdings, Sistem Penyuraian Trafik KL Barat Holdings or Sprint, Lingkaran Trans Kota Holdings or Littrack, and Project Smart Holdings or SMART. Gamuda plans to utilise 42.6% of these proceeds for capital management activities, including distribution of a special dividend, 38.3% for repayment of borrowings, 18.7% for working capital, and the remaining for expenses related to the proposed disposal. Gamuda owns 70% of Kesas, while Perbadanan Kemajuan Negeri Selangor holds the remaining 30% stake. Gamuda also owns 42.8% of Littrack and 50% of SMART, where it holds a JV with MMC Corp. In Sprint, Gamuda directly holds 30%, while Littrack has 50%, and Kumpulan Perangsang Selangor owns 20%, which gives Gamuda an effective 51.4% stake. Shares of Gamuda gained 8 cents to close at 3 ringgit 60, while Littrack closed 19 cents higher at 4 ringgit 87. KPS meanwhile climbed half a cent to 76 and a half cent. The Ministry of Finance says that there will be no new taxes, including the reintroduction of the goods and services tax in Malaysia, until the country's economic recovery is firmly on track. According to Deputy Secretary General of Treasury, Datuk Johan Mahmud Merakan, given that the economy is still recovering from the impact of movement restrictions due to the COVID-19 outbreak, no decision has been made as of yet. However, he says that in line with the MOF's mission of consolidating the nation's fiscal position, the reintroduction of the GST remains on the cards. Johan said the MOF's commitment to fiscal consolidation is not centred around the introduction of new taxes, but more of a consolidation and improvement of the existing structure. He explains that it is not just about strengthening revenue, but also moving the efficiency of the government's expenditure. In line with Malaysia's fiscal consolidation, Johan says the country's proposed Fiscal Responsibility Act, slated for end 2022, aims to broaden the nation's tax base, improve tax compliance and administration towards boosting tax collection. Earlier today, Finance Minister Tunku Datuk Sri Zafrul Abdul Aziz said the MOF is looking at introducing the FSA by tabling it when Parliament resumes on July 18th in order to boost tax collection, crucial to replenishing the nation's coffers to finance the nation's developmental and longer-term reform plans. MSM Malaysia Holdings says it is committed to its plan to overcome cost pressures in view of higher raw sugar, natural gas and freight costs, further exacerbated by the weak ringgit. Group CEO Fad'l Said Mohamad says the group has taken measures to mitigate this impact. These include securing most of its wholesale requirement for FY22, as well as its third-party agreement access with Petronas for pay-per-use and Brent hedging. He adds that MSM, together with Central Sugar's refinery, have engaged with the Ministry of Domestic Trade and Consumer Affairs, Ministry of International Trade and Industry, Ministry of Finance and the Economic Planning Unit to revise the ceiling price of sugar. The group has also engaged with others, including F&B players big and small, to get their feedback. When asked if an increase in the sugar price ceiling would affect households that are already dealing with higher costs of living, Fad'l points out that the frequency in sugar consumption is not as high as compared with chicken or eggs. He says that a household would generally use up to 1 kilogram of sugar over a period of 1 to 2 months, which means that the impact of a possible 50 cent per kilogram hike, for example, would be more spread out. MSM posted a net loss of 27.7 million for the first quarter of FY22 compared with the previous year's net profit of 31.2 million, despite a 16% year-on-year increase in top line to 596 million. MSM expects the rising cost of production to remain a challenge for the remainder of FY22. Magna Prima's shareholders have refused to approve its directors' fees of up to 200,000 ringgit during the group's 27th AGM held today. The property developer said 14 votes were against Ordinary Resolution 1, which is to approve the directors' fees from June 19th until the conclusion of the group's next AGM versus 6 votes for the resolution. In its boss filing, Magna Prima said the results of the poll were validated by Messrs. CHL, the independent scrutineer appointed by the company. It should be noted that last week, the group announced the resignation of its chairman, Tan Sri Azmi Abdul Wahab, following the failure of company to pay directors' fees, meeting attendance allowance and passage leave since April 2020. Notably, Azmi had held that position in the group since May 2006. According to Magna Prima's FY20 annual report, the group had highlighted the clampdown on directors' remuneration as it had been experiencing severe financial constraints. Last April, Magna Prima's independent auditor, Messrs. HLB Lelam, raised a material uncertainty related to its ability to continue as a going concern. Maybank Investment Bank sees the Malaysian initial public offering pipeline to value at around 3 billion in the second half of 2022, according to its Chief Executive Officer, Datuk Fad'l Mohamad. He says that across the wider equity capital market, Maybank IB is also seeing some traction in the merger and acquisition and private equity space. He says the deals are coming through in sectors like consumer, retail, general industrial, technology, media and telecommunications, and transport and logistics. On the M&A side, Fad'l says that there are a number of restructuring activities, particularly among the GLCs and GLICs, traction in the PE space, and in-country consolidation. Meanwhile, the local debt capital market has also remained stable with a full-year outlook of 110 billion compared with 114 billion that was recorded in 2021. He says that on DCM, there is a potential of 6.8 billion coming up in the second half and that ESG-linked alone is over 6 billion. Touching on sustainability-linked instruments, Fad'l says Maybank IB is seeing opportunities for key projects that fall within the category, coupled with ample liquidity looking for such green assets. He adds that on the demand side, a lot of investors are looking at this particular asset class and continue to have a strong appetite to take up ESG-related papers and sustainability-tied instruments.